What's up, everybody? Welcome to the 28th episode of the Investing Penguin. Covered calls and cash secured puts. A quick shout out to our newest subscribers, Alejandro Cueto, The Woodcrafter, Ramin Asili, Miguel Ruiz, Ben7295. Wow, so many new subscribers. Did I miss anyone? Let me know in the comments below. Thank you for subscribing to the channel, and for everyone else, hit that subscribe button. If you are new to my channel, stick around as I provide the mid-month breakdown for the month of February, and stick around till the end as I share some interesting facts about Russian company Gazprom and Nord Stream 2, that evil pipeline the Russians are building. And please hit all those buttons, subscribe, like, and share. It's supposed to help all my YouTube algorithms and make me filthy rich. But seriously, if you appreciate these videos, then please subscribe and share with your investment friends. For those of you who don't know me, I am the Penguin, and in this video, I provide the mid-month breakdown for the month of February. And February is turning out to be just as interesting as January. As I'm recording this video, the markets are getting hammered right now. Putin is invading Ukraine, and Canadian truckers are fed up with Justin Trudeau and his COVID-19 mandates. When you see the numbers, keep in mind, I like to keep these videos simple, easy to understand with relevant, straight to the point information. There's an acronym called KISS, K-I-S-S, Keep It Simple Stupid, and that's how I like to live my life. Finally, I'm here to show you all the juicy details for free. I'm not here to sell you anything, but please subscribe to the channel. So let's jump into this times of wasting. So grab a glass of milk. This video has more heat than a Carolina Reaper hot pepper. So let's take a look at the graphs for February. More roller coaster rides, up, down, earning reports, inflation fears, interest rate hikes, and now the Russian-Ukraine conflict. Here is the NASDAQ Composite, another roller coaster ride. Here's the S&P 500, more of the same, up, down, up, down. Here is Facebook. This stock got rocked after earnings. I don't think anybody was expecting a 30% drop. Facebook went from cash flow hero to zero overnight. Here is Viacom. This stock also got rocked after earnings. Finally, here is Nvidia. On January 5th, Kramer called a buy on Nvidia. And actually, Nvidia has recovered somewhat, so maybe Kramer is not wrong on this one. So here are my stocks that are on. If you have rolled dice in a craps game, then you understand the on button. AT&T is off the bench and back in action. For Kinder Morgan, I bought back my covered calls and sold Kinder Morgan, which I will explain in more detail in this video. I'm back into JP Morgan and I have sold covered calls. I bought Pfizer and sold covered calls. Same with Citigroup. I bought Citigroup and sold covered calls. I have sold covered calls on 3M, and right now 3M is getting hammered. Nucor. I bought Nucor via cash secured puts, and now this stock is looking like a winner. My covered calls will be called away this week for a nice profit. Goes in the books as a win. Walgreens. I'm back into Walgreens and have sold covered calls. Facebook. This was a gamble, but I sold cash secured puts after Facebook tanked due to earnings. For XLU, my first cash secured put expired worthless, so I decided to rinse and repeat and sell another cash secured put. Bristol Myers goes in the books as a win. My cash secured puts expired worthless. And Micron goes into the books as a win. My cash secured puts expired worthless. So here are my stocks that are off, sitting on the sideline and not collecting any premium because the trading price is too far below my purchase price, so the premium is worthless. So let's review some February trades in greater detail, especially my Kinder Morgan stock. On June 29th, I bought 2,000 shares of Kinder Morgan at $17.94 a share for a cost of $35,896.40. I expressed in previous videos I bought Kinder Morgan at too high of a price. I really needed to buy Kinder Morgan in the $16 range. Then between June and February, I executed 5 covered call contracts, generating $1,433.59 in premium, aka profits. I also collected 3 dividend payments, generating $1,620 in dividends. Kinder Morgan has a nice dividend yield. On Wednesday, February 9th, I decided to buy back my covered calls at a cost of $20.20. Then I immediately sold all 2,000 shares of Kinder Morgan at $17.55 a share. The reason I did this, oil prices just kept going higher and higher, and I felt like Kinder Morgan was trading at the top of its range. And I had just captured the 3rd dividend payment. So I decided to lock in profits. And I'm going to put Kinder Morgan on my radar screen when it hits $16 a share. I made a profit of $2,236.77 for 225 days, which is a 10.1% annualized return. And listen, it's not a great return, but it is an okay return. My goal was that I really wanted to get out of this trade with a win and hopefully buy Kinder Morgan again in the near future at $16 a share. So here's a graph of Kinder Morgan stock between June of 2021 and February of 2022. This graph gives a nice visual representation of the trade. Right after I purchased Kinder Morgan, I started writing covered calls, but the stock couldn't stay above $18 a share. It just kept dipping down to 16. So like I said before, I decided to sell at $17.55 a share and lock in profits. So here's a trade that started out as a disaster. I discussed Nucor in my January videos where I sold cash secured puts on Nucor and then the stock tanked right past my strike price. I was assigned the shares at 107 and now Nucor did a 180 and shot up for a nice profit. So after buying Nucor for $107 via the cash secured put trade, I immediately started writing covered calls. On February 1st, I sold 2 covered call contracts for $1.41 for the February 18th expiration and the 115 strike price. I collected a premium of $280.68. If on Friday, February 18th, Nucor closes above 115 a share, then the following Monday, my 200 shares of Nucor will sell at 115 a share. I'm expecting to make a profit of $1,880.18 for 20 days, which will be a 160% annualized return. And that's a great return. So let's review another covered call trade in February. I have traded Walgreens in the past and I am very comfortable with Walgreens at 47 a share. So I decided to buy 500 shares of Walgreens and write a covered call. I'm expecting to make a 60.5% return on my money. So check this out. On February 14th, I bought 500 shares of Walgreens at $47.09 a share. That same day, I sold 5 covered call contracts for 69 cents for the February 25th expiration and the $47.50 strike price. I collected a premium of $342.19. If on Friday, February 25th, Walgreens closes above $47.50 a share, then on the following Monday, my 500 shares of Walgreens will sell at $47.50 a share. I'm expecting to make a profit of $546.74 for 14 days, which will be a 60.5% annualized return. Plus, I will be capturing the dividend payment of $238.75. That's the dividend capture strategy. You write the covered call, so you can also capture the ex-dividend date and capture that dividend payment. Now, what if Walgreens stock does nothing? It just hangs around the $47 a share price and never breaks above my strike of $47.50. Well then, I'm going to keep the shares, I rinse and repeat, and write the same covered call again and keep collecting premium. Like I stated earlier in the video, Facebook got rocked after earnings. I don't think anybody was expecting a 30% drop. Facebook went from hero to zero overnight. So this Facebook trade is kind of a gamble. After Facebook stock was crushed by earnings, I decided to sell a cash secured put. I had the potential to buy 100 shares of Facebook at $200 a share. On February 3rd, Facebook was trading at $240.89 a share. I sold one cash secured put contract for $1.01 for the February 18th expiration and the $200 strike price. This was a pretty deep out of the money strike price since Facebook stock could slide further due to the earnings fallout. I collected a premium of $100.34, which equates to a 12.2% annualized return. Now, if Facebook closes below $200 a share on February 18th, in my opinion, I'm buying those shares at a discount. But the markets may disagree. What say you? Do you think Facebook is a bargain at $200 a share? Put it in the comments below. And if on February 18th Facebook closes above $200 a share, the option will expire worthless and I will still make a profit of $100.34 for 15 days, which is a 12.2% annualized return. I took a lower annualized return in exchange for a lower strike price. So in my January video, I highlighted my XLU cash secured put trade and it expired worthless. So I decided to rinse and repeat and sell a cash secured put again. I had the potential to buy 300 shares of XLU at $66 a share. On February 14th, XLU was trading at $66.58 a share. I sold three cash secured put contracts for 95 cents for the March 4th expiration and the $66 strike price. I collected a premium of $283.31, which equates to a 29% annualized return. Now, if XLU closes below $66 a share on March 4th, I'm buying those shares at a good discount, which is fine since I will start writing covered calls then. And if on March 4th, XLU closes above $66 a share, the option will expire worthless and I will still make my profit of $283.31 for 18 days, which is a 29% annualized return. And that is a great return. So these are all the stocks that are on the radar screen. Stocks that I have traded, stocks that I have seen on various investment channels, investment groups, watch lists, etc. Remember, you have to develop your own list of stocks and do your own homework. Remember, don't trade stocks solely based on the news. Do your homework. For me, I really enjoy following the news and current events and understanding how it may or may not affect the markets. Here are some additional resources to help you in your investment research. I like John Najarian's 3 at 3 daily video where he discusses unusual options activity. Well, that's it. Time flies when you're having fun. Having fun making money, that is. Let's hope February ends on an up note. More videos are coming and stick around for 10 seconds more as I share some interesting facts about Gazprom and Nord Stream 2. So this write-up and all the photos are taken from the Gazprom website. Gazprom is more than 50% controlled by Russia and has other foreign banks and investors, but it is basically a Russian company. The take from this slide is that Russia supplies a lot of natural gas and oil to Eastern Europe. Eastern Europe is really energy dependent on Russia. Whenever your country is dependent on another country for energy resources, well, that can be a recipe for disaster. And I think it's funny that Joe Biden waived sanctions against the Nord Stream 2 pipeline, but shut down the pipelines in our country. And really, let's be honest here. Who the hell is Joe Biden having an opinion on the Nord Stream 2 pipeline? It was already built. It's an essential pipeline for Germany and Eastern Europe. Even though the pipeline is carrying Russia's natural gas, the pipeline was financed by huge multinational companies like Shell Energy. But nonetheless, that's a lot of power under Putin's control. He could cripple Eastern Europe by shutting down the pipelines. You never give me your money. Money music, the Beatles. You Never Give Me Your Money. This song was written by Paul McCartney and documented the financial and personal difficulties facing the Beatles. This song is featured on their Abbey Road album. The song was written by McCartney when he was staying with his wife Linda in New York in March of '69, shortly after their wedding. The line, "One sweet dream, pack up the bags, get in the limousine," was based on his trips in the country with Linda to get away from the tense atmosphere. Disclaimer: I am not a financial advisor. This video is for entertainment and educational purposes only, and I really hope you enjoyed this video. I am only sharing my experiences and opinions. Investing involves risk, so please seek advice and educate yourself.